Hey there, welcome to the channel. So today, kind of take a look at what's going on in the market today. Okay, well, we got the cat cam on. There's Clyde, our cat, looking out the window. All right, so if we look at oil, Brent crude here, you can see that it's up again today, 382. But one of the things that kind of notice here is that it's sort of, maybe this extent, this rally is getting a little extended because you had the day before, you had this huge range, right? Really huge range. And today, yes, we're kind of up from where it closed the previous day, but was still within the range from the previous day. So what's going on is, kind of for now it's sustaining it, but these are pretty extensive moves. This is near vertical, near hyperbolic type of move, and these moves very often don't know how long they'll last for sure. So let's go look at another one, West Texas Intermediate crude. So that's the US kind of benchmark, same kind of situation, very similar. And then if we look at the 10-year today, 10 years interesting. It had been going down recently. We kind of had this little downtrend here, but then it kind of popped up today. So that's kind of interesting. And because, the market going down, has been like, apparently as indicated by the charts, there's some movement into bonds causing the yield to go down a little bit. But interesting today that kind of reversed, at least in the very, very short term on that guy too. Let's look at our wheat. Yeah, wheat is interesting here. This one, today is just a big, just messy day. So if you look at this bar, kind of understanding what happened on this bar today, this is where it's probably too extended. So if you look here, it looks like, what did it do? It looks like it, because it's shown up as a black bar. So it kind of, well, yesterday was here, it opened up here, did something, came all the way down, came back up to here, something like that throughout the day. And that gives you this kind of bar that is a solid down bar here. So what you have is this kind of a bearish engulfing, basically the range today, it basically engulfed the entire bar from the previous day and ended up closing poorly on the downside. So, these kind of moves are so hyperbolic and so quick that, hey, when they change, when they turn out, they're going to happen really quick. Now, it's really interesting. If I go back, there was a book, and I can't remember the guy's name, and I should have looked that up, but there was a guy that he was trading stocks in the 2000s, and he was trading, and he was really into really technicals and micro patterns and stuff like that. And one of the things that he would do is he would look at these guys' charts like this. I mean, he was trading the tech stuff, the Cisco's of the world, and all the stuff that was really moving. And one of the things the guy would look at is this indicator called the ADX, and that's what I have over here. And basically, if you're in a situation where you have the green in the ADX indicator like this, you have a very strong uptrend, and you can see this very high. It's almost at 50, which is very high, as well as RSI, very strong. So here's the issue. If you're looking at this and you say, well, RSI, what would be the indication of this? Well, you're overbought on the RSI right here, right? So if you're looking at the RSI, you overbought. But one of the things that you will find is that there can be periods of time where you can stay overbought for quite some time. So that's one of the things that happens. And so one of the patterns that this guy would have would be something like a TKO, he would call it, like a technical knockout. And he was trading like just, within the day. So that's what the kind of thing that you could have happen here. So one of the things that you may find in some of these energy markets is you might find really quick, 2 or 3 days down. And then, so this is not trading advice, this is not investment advice. This is just speculation and paper trading here. So for example, looking at this chart, and I'll do it over here. So we replicate the chart, it goes up like this. And then we have, let's say we start getting some really, and they're really quick, because look at the distance that calls it the daylight to get to the moving average. It's like so much, like, in other words, like typically you could have a pullback to the moving average, and that would be normally expected. But a pullback here is so far to go because we've had this huge ramp, right? And so we see this, and I'm just looking at wheat right now, but it's very similar to what you saw in oil and stuff. So one of the things they might have is like these bars, they'll correct really quick. Maybe it'll come all the way back down really quick and then level out, and maybe to some other kind of trend. Or you may get something like this where it's going like this, and these are all various bars of whatever form, and then you'll get like a bar down, you get another bar down, something like that. And then all of a sudden you get this huge reversal and it starts going back up again. So, this is kind of one of those things. So if you were looking at it, paper trading this, as this thing is coming down, and he would measure it, this guy would measure it like he'd start looking after 2 or 3 days down. This bar wouldn't count, but this would be maybe the start of a pullback where you'd get a couple of days down. And then if you wanted to get back in, he'd be looking at this and he'd be looking for a setup where it's like, okay, we had 3 bars down, 1, 2, 3, anywhere from 3 to 7 days down, and he'd just kind of be putting to like some little buy somewhere above here and that kind of a thing. So that basically, if you can catch it, if you catch where it's like, okay, now the thing is you don't want to catch it when it gaps up on you, right? So this is something where you have to really pay attention and be like, okay, don't do the trade if you're gonna have to overpay. You want to pay within a certain amount, getting in here, it triggers, and then so what's going to happen so you can catch if it starts going back up. Because when you look at what was happening in the tech, it's funny, I talked about the tech bubble in the 2000s and the tech stocks, and many of those stocks don't even trade, so it's hard for me to get the charts, but they would have this kind of stuff. They had moves that were just like this, even the last moves of the QQQ going up for just crazy like this. And so there was very often there would be setups where you'd have a move like this, it would pull back a little bit, and then it would just start going back up. And this would be a situation where this would happen surprisingly more often than not. I mean, eventually it has to stop. Eventually it has to come down, but we'll see about that. But the problem is, just buying something here is like, so look, my position is I've been watching, let's look at this one here. I've been watching gold for a long time, and I had gotten burnt on it because I had bought some, and I'm like, oh, I'm going to hold some gold way back in the day. And I have not been sitting on any for some time because there's been 2 things going on with it. One thing is that, it hasn't moved, but now we have this huge breakout. But the problem is I've missed it, right? So this is just a really great example of if you're trying to trade, it's sort of poor trading, right? And so, am I providing any useful information to you? Yes, I am. I'm telling you what not to do. You can't chase it here. You can't really chase it. I mean, you can, but the problem is this particular move, this may be it. It may go up a little bit more and just come all the way back down and break down. You don't have any idea. So one of the strategies, like I was just saying, is if you were looking, at the daily chart, maybe you can play some games like that, but it is risky, because you're dealing with stuff where, this thing will come off, if you're looking at gold, this thing will come off 5-10% in a day, right? If you get something like bars coming down like this, but sometimes that might be a buy point, and that might set it up for it to go higher, like, whoops, it starts going up from there and it may continue a trend, but it is too steep in the big picture. So at some point this will have to break down because it's just too steep. And, the ideal way that might happen, would be some kind of stabilization as the moving averages catch up to it. And then a more nuanced, sustainable rally would be something maybe that would be a little more sustainable. So I think that's it on gold. I mean, like gold and the dollar kind of moving up together, and we had seen before, and a really volatile market. Now, interesting. See, look at this guy. The dollar kind of dojied out today. And so what I mean is, you see it was making a move, and it's kind of been moving up, and you had some corrections, like this would be like a TKO, technical knockout, and then it's going up, gapping up, and then you have the doji. And a doji, the thing about a doji is that you've kind of arrested your trend in the very, very short term on the daily basis. See, for this day, we didn't make any progress. You just like, boop, you spent all day trading within a range, kind of similar to the previous day range, and then you didn't make any progress. So that's kind of like why I say things like doji out. They sort of bomb out or stall. That is kind of it for that. So one of the things too to look at, ARC doing its thing, but let's look at the intraday stuff today. Was kind of interesting. If we look at that, and so really volatile. So this is SPY, and yeah, just really, really, really volatile crap today, and this is part of the problem that you have. You're kind of in this downtrend here, the last day, and then you got this W in here. Okay, and you broke above the W, so that's great. But the thing is just the volatility here. You get this kind of rally, goes up to here, sells it all off, tries to recover, sells it off at a loss. So it's just really volatile. And because if you look at things and you look at what's going on in Ukraine, you're like, you have no idea what's going to happen, right? I mean, you would hope that, so let's talk about the Ukraine situation. Like, you would hope that there could be some deal, hopefully, at this point, honestly, it's just like, it's really kind of Zelensky has to, I mean, I'll just say this. So if we look at it, it's like this affects the whole world. And in a way, it's sort of silly that Zelensky and Russia are talking to each other. Like, look at it this way. It's like, well, you guys don't, you know what I mean? It's like at some point wouldn't like the president of the US kind of step in and start talking to Russia directly. And I don't think, and I'm not hearing that that's happening at all. And so the question is, well, okay, but it's not and I would agree that, these are sovereign countries and we're not directly involved. But the consequence is that, you're talking about potential nuclear war. The whole world is involved. So to sit there and just sit on the sidelines, in other words, look, at this point, it's like, just, it needs to stop. And the sooner the better for everyone involved, even Russia. Look, this is their next Afghanistan. They're going to suffer. And yeah, they may technically win in the short term, but in the long term, it's just going to be so bad for them. On top of just in the short term, it's just going to be all these Ukrainians are going to die and all this stuff. And, there has to be a compromise. It's like on the surface, it's like, yeah, okay, just give them the breakaway regions, accept this, accept that. But the problem is, the last thing is like, well, making Ukraine a helpless state without even a basic military, that's kind of like, well, how does that work? That doesn't work. So that would be the area for the next tension, right? See, that's, Putin is smart in that regard, that he's like, he sets that up. It's an unattainable goal. So if we go back in history, when you go back to World War I, at the start of that, so there was the assassination of the Duke Ferdinand, right? And this starts a pissing match between, the great superpowers, right? Okay, so looking at history, we can go and look back towards like the First World War. So basically what happened is that conflagration, which really World War I and how it was not handled well in the peace talks led to World War II, and just just a calamity for all of humanity. It's just rather amazing. But what I would say is that if you look at how this happened, it's basically you have Serbia. This guy just kills the Archduke Duke Ferdinand and the heir to the throne, and then basically starts this pissing match between all the world powers. And this little act ends up leading to a war that kills like over 20 million people or something like that. Just an incredible catastrophe. Now, one of the things that happened in there is that when Serbia, because this happened in Serbia, in the person that did it was, a Serbian national, and they agreed to like something like 19 out of 20 of the demands, and they didn't agree to just one of the commands. And these demands were just super restrictive and very difficult demands to meet. So the point is they bent over backwards to meet the demands, but the point was the demands were made so that they couldn't be met. And go on to the Gulf War, right? Similar kind of situation. The US put up demands that couldn't be met. Turn over your weapons of mass destruction. There weren't any. So how could you turn them over? I mean, just basically set up demands that can't be met. So now here's the thing. The question is, is that what Russia is doing right now? Are they putting up demands that are not possible to meet? It's just not sure. And that's sort of the hedging thing. So if you look at it and saying, recognize breakaway, recognize Crimea, don't join any bloc like NATO or EU, that's all, like, just looking at it objectively, that's all reasonable. But the problem is that it's an open-ended thing about demilitarization. Like, what the heck does that mean? You cannot have Ukraine. And if I was Ukraine, I wouldn't agree to be like, well, I'm not going to have any military at all. Screw you. Screw you. So that's kind of where we stand with military. So there's a lot of uncertainty. And I think that's kind of reflected in this intraday trading here that you saw. And you can see it on this bar, right? You see that you opened up here, you traded down, but you had this rally in the day that was non-sustainable. So your day probably looks something like this, goes down, goes up at some point, yay, and then it goes down. So that's where we're at. So be ready for more uncertainty. But the only question is really the problem is that it gets so high. If I look at the VIX, and I just want to look at the VIX here too. Let's look at VIX on a weekly, and let's try to look at like a max weekly here on the VIX. And so here's 20 years of VIX as measured here. And you can see that, the VIX is very high. And here's the problem. See, a VIX very high. Very often it does go here. Like not very often, but you can say like, hey, when the VIX is above 30 or above 35, that's the time to buy the market, for example. Someone can come up with that. And you probably find that that's the case. But the issue is you really have, where does this sit? We're up here. We're not even at 40 yet. And yet back here, just when the Cerveza thing happened, we were way up at 85. So we're nowhere near there yet. So in terms of looking at the market, carnage in the market, and we're not even there yet. I mean, what's happening now in Ukraine compared to what happened just as Cerveza shut down? I don't think you can even compare them. I don't think you can compare. What's happening now is much more significant. So we're not even halfway there to a peak in the fear yet. Going back to the financial crisis. Now, the financial crisis, what was happening there is a lot of financial stuff, a lot of people losing jobs, a lot of economic misery, but there wasn't a lot of like human tragedy. Now we have human tragedy leading to economic tragedy, high inflation, a whole bunch of things. Like if you were looking at this and you look at the history, like, look, I lived through this, right? I lived through all this stuff. I was there in the tech crash and all that stuff. And look at that. That was like nothing in terms of it. So, the big picture, what's happening now compared to all that? I mean, this is like, in terms of significance, if I was to say, let's judge VIX as a measure of how important the times are in the event, this is 100 times more important than this, 1,000 times more important than this. I can't even go back. The only place I could guess to go back to, if I was going to look at this, was 1962. If I go back to 62, which I can't get the chart on my thing, if I go back to 62 and look at it during the Cuban Missile Crisis, that might be the place to look. All right, well, that's it for this one. Talk to you later. Bye.